Have you ever heard someone say you need exactly $500,000 to retire? Or maybe $1 million? Maybe you heard it at a family dinner. If I hit $300,000, I'm good. If any of these ideas have ever crossed your mind, stop now. Because this is one of the biggest lies that destroys the retirement of millions of Americans every single year. And before I explain why, do yourself a favor and help other people who need this information. Hit the like button, subscribe to the channel, and comment, "I want to protect my retirement." It helps the YouTube algorithm push this message to people who are in the dark right now, just like you might be. Let's get right to it. There is no magic number. There is no 300K, 500K, or $1 million that works for everyone. That fantasy is sold by influencers, magazines, and advisors who never actually lived a real American retirement. Why do so many people believe it? Because the brain loves simple targets. It's comforting to think, when I reach this number, I'm finally safe. But retirement isn't about how big your pile of money is. Retirement is about monthly survival. Let me challenge you for a second. A person with $600K living in New York, renting, paying high Medicare premiums, prescriptions, co-pays, and maybe home care will burn through that money faster than they ever imagined. Meanwhile, someone with $250K living in rural Texas, house paid off, low monthly costs, might live more peacefully for years. So how can anyone believe there's a single universal number? And here's where it gets even more dangerous. People hit their magic number, quit their job, slow down their investing, relax, and then reality hits. Life in retirement is dynamic. Your body changes. Your expenses change. Your health care costs skyrocket. Family situations happen, and suddenly, that number that looked massive becomes a puddle in the desert. Let me give you a real scenario I've seen over and over. Someone reaches $400,000, retires, lives well for 12 months. Then a bad market year hits, a surgery they didn't expect, 2 years of high inflation, a jump in medical insurance, and boom, that perfect nest egg turns into a crater. Here's the truth nobody tells you. People don't retire poorly because they didn't reach a certain value. They retire poorly because they built their future on a myth. Retirement is not about hitting a static target. It's about understanding flow, expenses, time, and the moving variables that hit you when you stop working. And this is where the pain begins. The magic number feels emotionally comforting, but financially devastating. It makes you stop planning, stop adjusting, stop reacting to reality. But life doesn't care about your number. It charges all the invoices with interest. So take a deep breath and understand this clearly. You don't need a secret number. You need to understand how much your retirement will consume, not how much you can accumulate. And that's exactly what we're going to unpack right now. Because the real question was never, how much do you have? The real question has always been, how much do you need? And for how long? So now that you understand there is no magic number, we can finally talk about something measurable, something concrete. Because when most Americans start thinking about retirement income, they instinctively reach for the same life raft, Social Security. And this is where another dangerous illusion begins. People assume Social Security will cover the basics. It sounds comforting until you see the actual numbers. The average Social Security benefit today hovers around $1,400 per month. If you worked above average and delayed your claim, you might get a bit more. If you claimed early or had inconsistent earning years, you'll get less. Some people are shocked when they see their first deposit, not because it's small, but because it's nothing close to what they imagined. After 30, 40, sometimes 45 years of work, and here's the part nobody likes to hear. Social Security was never designed to be a full retirement plan. It was designed as a safety net, a minimum level of income, a floor, not a ceiling. It's there to prevent seniors from living in absolute poverty, not to provide comfort, stability, or financial breathing room. Look at the cost of living in the United States today. Even in cheap states, groceries, utilities, rent, gas, and healthcare add up quickly. A normal senior living modestly can burn $3,000 to $4,000 per month without even trying. And remember, that's not a luxury lifestyle, that's just existing. You can be extremely responsible your entire life and still retire into a situation where your guaranteed income is only half of what you need. And the gap doesn't disappear. It follows you every month, every year, until the end of your life. The misunderstanding gets even worse when people delay Social Security thinking it's the solution. Yes, delaying increases the benefit, but it doesn't change the underlying math. If you're living in Florida, California, New York, New Jersey, or even parts of Texas, your cost of living might be $500 to $6,000 per month easily. Even with the maximum Social Security payout, which most people never reach, you're still short. That missing amount has to come from somewhere: investments, savings, side income, or cutting your lifestyle. And let me be brutally honest, the government knows this. That's why every Social Security statement includes projections with a disclaimer. These benefits are not guaranteed. They're telling you, in fine print, that your retirement is your responsibility, not theirs. But most Americans don't notice it until they're already retired, staring at a benefit that barely covers rent or food. And here's where it gets truly dangerous. People start compensating. They pull from their 401k or IRA too fast. They tap their savings for just a few months. They use credit cards. They refinance. They borrow. They do anything to cover the monthly gap. And they don't see how fast their financial oxygen is disappearing. The harsh truth is this: if your retirement plan is, "I'll live on Social Security," you don't have a retirement plan. You have a countdown clock. And here's where things get even more dangerous, because the shortfall between your Social Security check and your real monthly costs isn't even the biggest threat. Most retirees plan their budgets based on what life looks like today: rent, groceries, gas, utilities, the things you buy every month. But retirement doesn't punish you with the predictable. It punishes you with the unexpected. Ask anyone over 60 what changed most after they stopped working. They won't say food. They won't say rent. They'll say one word that carries a price tag bigger than anything else in the United States: healthcare. You can go decades paying almost nothing for medical expenses, and then suddenly you're hit with a $5,000 bill because you slipped on the stairs. You can be perfectly healthy, active, working, confident, and then one diagnosis changes the entire financial trajectory of your life. And the worst part, it doesn't matter how responsible you've been. It doesn't matter if you never missed a payment or if you saved religiously for 30 years. In the United States, one health event is enough to erase everything. People think Medicare solves this. They think, well, I'm older now, the government covers me. But Medicare has holes, big ones. Deductibles, co-pays, prescription costs, specialist visits, dental, vision, long-term care. None of that is fully guaranteed. And don't forget, Medicare premiums increase over time. And they penalize you if your income rises in retirement. You pay more for doing better. Then there's the hidden monster, long-term care. Not hospitals, not operations, just living. If you need help bathing, dressing, or eating, if you need someone to check on you at night, if you need to move into assisted living or a nursing facility, you're no longer dealing with bills, you're dealing with burn rates. $4,000 a month, $6,000 a month, $8,000 a month, sometimes more. And that cost doesn't last for 1 month. It can last for years. This is where retirees break. Not because they made one bad financial decision, but because they never imagined a world where their body, not the market, would be the enemy. They planned for vacation. They planned for hobbies. They planned for bills. But they never planned for the day when they couldn't walk to the bathroom alone. And inflation doesn't care about age. Groceries climb, rent climbs, medicine climbs, insurance climbs, even funerals climb. Meanwhile, your Social Security check crawls. A COLA adjustment that adds $70 or $80 per month doesn't matter when your cost of living jumped $400 or $800 or $200. It's like trying to stop a flood with a paper cup. That's when you see the real fear, not fear of death, but fear of running out of dignity. Americans don't end up broke because they're irresponsible. They end up broke because retirement in the U.S. is a marathon with obstacles no one talks about until you're too tired to jump. And when retirees finally understand this, they ask the same question. How am I supposed to survive all this if I can't rely on Social Security alone? And that question leads directly into the next truth, one most people don't want to face. If your expenses keep rising every year, the only way to stay alive financially is to focus on income, not savings. You reach that moment of fear where the numbers stop making sense. Your Social Security check doesn't grow. Your monthly expenses do, and suddenly you realize retirement is not about having a pile of money. It's about having income that actually arrives every month. This is the point where many Americans finally understand the truth. Retirement isn't a bank account problem. It's a cash flow problem. If your bills are $4,000 every month and your income is $1,900, it doesn't matter if you have $300,000 or $1 million saved. You're bleeding, and every month of bleeding shortens your retirement by years. That's why retirees who succeed don't focus on how much they saved. They focus on how much they can earn passively, consistently, and predictably. They don't try to guess the perfect number. They look at the gap. I need $4,000. I receive $1,400 from Social Security. Where does the other $20,100 come from? That's retirement strategy, real strategy, not inspirational quotes, not millionaire targets, just math tied to real life. And here is something most people never hear until it's too late. Your expenses in retirement will continue even when your body stops working. You can't just get a better job at 68. You can't work more hours at 74. You can't reinvent your career every time the economy turns. Retirement is the first phase of life where your body and your bills move in opposite directions. One weakens, the other increases. The only thing that keeps you alive financially is income that doesn't depend on your body or your mood or your ability to wake up early. That's the foundation. This is why certain retirees live with peace. They don't need huge numbers, they need reliable streams. Social Security plus IRA distributions, plus dividends, plus bond yields, plus cost annuities, plus cost small rental income, plus side income that they enjoy doing. The smartest retirees don't ask, how much money do I need to retire? They ask, how many streams do I need so my expenses are always paid? They don't obsess over the total. They obsess over coverage. And once your monthly income begins to exceed your monthly expenses, something shifts inside you. You stop checking your bank account every morning. You stop worrying about the next recession. You stop panicking when healthcare premiums rise. You stop relying on withdrawals, and your savings become a backup instead of a life raft. That's what real freedom feels like. People think wealthy retirees are the ones with the highest net worth. But that's false. Wealthy retirees are the ones who never have to ask themselves, can I afford this month? They don't wake up praying that the market doesn't crash or that the next election doesn't change Social Security or Medicare rules. They built a foundation where income is bigger than uncertainty, and that protects them from everything else. This is where so many Americans fail. They spend decades accumulating and never spend a single week designing cash flow. They retire with savings, not income. They believe the savings will last a while, and for a short time they do, until something happens, until the market dips, until a child needs help, until Medicare premiums change, until inflation jumps, until their rent increases. And then they begin to do the one thing that kills more retirements than anything else. They start taking money out of their savings early and often. Not because they want to spend more, but because they have no other choice. When your expenses are bigger than your income, every month is a countdown. You're not aging, you're burning runway. It doesn't feel like a mistake in the moment. It feels like solving a problem. I'll just take an extra $400 from my IRA. I'll just withdraw $5,000 this year. But every small withdrawal you make is not just money leaving, it's growth disappearing. You're cutting the wings off your own retirement. And this leads us directly to the part that most people never truly understand until the damage is already done. Your retirement number is not a fixed target you reach once. Your real number is a living equation. It changes every time the cost of living changes. It changes every time you move. It changes every time your health changes. It changes every time inflation hits. The question is not, how much do I need to retire? The real question is, how do I build enough income so my retirement survives whatever life throws at me? And this is where the mindset of a successful retiree becomes very different from the mindset of someone who just hopes it works. Instead of obsessing over the total amount they saved, they look at their lifestyle like a business. Every business has fixed costs, variable costs, unexpected costs, and reserved capital. Businesses don't say, we have $300K in the bank, we're safe forever. They look at margins, cash flow, sustainability. They track burn rate. They plan for risk. They adapt. Retirement is the same. You must think like someone who has a monthly operating cost, not like someone who reached a big number once. And the truth that shocks most people is that retirement can become dramatically safer with something very simple. One meaningful, reliable income stream added to what you already have. It might be dividends that cover $200 a month. It might be a small rental unit that pays $600. It might be laddered CDs paying $350. It might be a bond ladder that covers $500. It might be consulting or part-time work you actually enjoy that gives you an extra $1,000. Suddenly, the pressure disappears. Your withdrawals slow down. Your savings breathe. You're not cutting your retirement wings anymore. You're letting them grow. This is where thousands of Americans make a tragic mistake. They treat retirement like the finish line. I'm done. I crossed the goal. I don't have to do anything else. But retirement is not a finish line. It's a transition. You're exiting the phase where you trade time for money and entering the phase where money must work for you. The people who fail are the ones who leave the workforce without a single line of defensive income. The people who succeed are the ones who build a plan that pays them every month, whether the market is up, down, sideways, or completely insane. And here's a truth most retirees don't want to hear. If your retirement depends on how much money is left in your savings, you don't have a retirement. You have a countdown. But if your retirement depends on how much money comes in every month, you have resilience. You have flexibility. You have margin. You have dignity. You don't need to be a financial genius or a millionaire to make this work. You just need a framework to understand your real number, not the number influencers brag about, not the number your neighbor talks about, not the number your cousin in Florida said worked for his friend. Your number, and the math is simpler than you imagine. Here's how you do it. Take your current monthly living cost, not a fantasy version, not the if everything goes perfectly version, the real one. Add 20 to 30% for unpredictable expenses, healthcare volatility, and inflation. Then calculate that amount for a full year. That's your required survival income. Then subtract what you already receive: Social Security, rental income, annuities, dividends, pension. Whatever remains is not a punishment. It's your target, the gap you need to fill with investments, passive income, or an independent source of revenue that you control. When you see your retirement this way, something fundamental changes. You stop chasing a magic number. You stop comparing yourself to other people. You stop panicking every time the news says recession. You stop treating every market dip like the end of the world. You stop staring at your bank balance like a lifeline. Because now you understand that the real question was never, how much do I have? The only question that matters is, does my income exceed my life? When that answer becomes yes, even by a little, retirement stops being fear and starts becoming freedom. If this helped you today, do me a favor, hit the like button, subscribe to the channel, and comment, I want to protect my retirement. It helps other Americans like you find the truth they've been ignoring for years.